What's up, guys? It's Dan from Coin Bureau Trading. Today, we're going to take a look at the popular Bitcoin and global liquidity charts that are going around, explain why they're probably not entirely accurate, and what measures of liquidity you need to be watching when it comes to forecasting crypto prices. If this is the kind of content that you enjoy, then be sure to smash that like button, subscribe to the channel, and ping that notification bell. Before we get started, do keep in mind that nothing in this video is financial advice. It's just my personal analysis of the crypto market. Your analysis could be different, and if it is, that's awesome, because the more difference of opinion that we have, the better traders and the better investors we're all going to become. So I want to start out, guys, by showing this chart here. If you're active on X, chances are you've seen it at some point. This is basically a Bitcoin price of corresponding to global liquidity with a 12-week lag, essentially. This is a chart provided by Real Vision, specifically by Julian Biddle, who's one of the analysts working at Real Vision. If you follow Raoul Pal, you'll know that he shared this chart a lot. And there's been variations of this chart going around. And the interesting thing, and the thing that I think is kind of debatable, is that when you look at these charts, again, they come with some kind of lag, right? So in this case, it's the 12-week lead. So basically 3-month, you could say 3-month lag for Bitcoin, that when global M2 rises, that it takes about 3 months for that to find its way into Bitcoin. But the thing is that if you look at other global liquidity indicators, like, for example, the one from Bitcoin Magazine Pro, you'll see that this is actually a real-time global liquidity indicator, and you can see that it also corresponds quite nicely to Bitcoin's price. Same thing for other free indicators that you can find just online. If you just type Bitcoin and M2, if you actually look at the details of these indicators, you'll notice, wait a minute, these don't have a lag, like in the basically, like, they're not like superimposed as a lag or whatever, and you can see that they actually closely correlate to Bitcoin historically. Of course, you could say here there's some periods where there's a little bit of lag, or even like a little bit of leading, or even here some decoupling, right, where global liquidity is rising but Bitcoin is falling, right? You see lots of stuff like that, and basically what that shows us is that, these global liquidity indicators, again, they're not, I don't want to say that they're not entirely accurate. They're definitely useful, like they're directionally correct, I would say, but they aren't as helpful as people think, and they're going to become even less helpful when we approach the cycle top. This is something that was actually explained by Lynn Alden. Like, this is not just me, like, making this up out of the blue. It's actually based on a very fascinating report by Lynn Alden from a couple months back, specifically back in September. So it's been a while. Time flies. We actually summarized this report on the main channel, and the key takeaway, in my view, from this report was that and I'll actually just read it out. Bitcoin's correlation with global liquidity is high, but not immune to short-term deviations caused by idiosyncratic events or internal market dynamics, especially during periods of extreme valuation. In plain English, what that basically means is that during a crypto bear market bottoms and crypto bull market tops, Bitcoin tends, and crypto in general, tends to decouple from liquidity. And we can actually see that if we go back here, for example, this real-time liquidity chart here, you can see that Bitcoin will actually go above, like, basically liquidity flattened out, but Bitcoin continued to rally during the cycle top. And then during the bear market as well, you can see that liquidity started to rise, but Bitcoin's price was still, like, in the toilet, basically, right? So there's a lot of basically, like, extreme, like it was saying, I guess, idiosyncratic deviations near cycle tops and near cycle bottoms, and these can last for quite a while, like for multiple months. So again, everyone's looking at this chart, for example, like, going back to the lead, lag, whatever, everyone is looking at this chart here, and I'm sure some people are saying, oh, well, we're seeing, it looks like liquidity is going to flatten out sometime over the summer, which means that the price is not going to be rallying as high. Of course, this is also another common narrative, is that, oh, global liquidity is not rising at a rate that is as rapid as it was before, so therefore the crypto bull market will be muted, or altcoins aren't going to rally, or, insert whatever narrative you want there. But again, the thing is that during cycle tops, Bitcoin and crypto as a whole will actually decouple. Again, according to Lynn Alden, who's like very, highly respected macro analyst, who's really deep in the weeds on this stuff, she basically found that, hey, like, there is a kind of like a decoupling, like a bullish decoupling and also a bearish decoupling during cycle tops and cycle bottoms, respectively. So again, key takeaway being that, this is super useful, especially, during periods like this. But as we approach the cycle top, I think you're going to see Bitcoin and crypto decoupling from liquidity to the upside, and everyone's going to be like, oh my God, like, what's going on? Like, is this some kind of, breakaway trend? Or maybe people will just stop talking about these charts entirely, or maybe the people who are making these charts will say, hey, Bitcoin's getting ahead of its skis here. It's going to need to come down and, come down just like this liquidity, but then Bitcoin doesn't come down and just keeps going up, and everyone's wondering what's going on, right? Again, historically speaking, that would actually be pretty normal. Key takeaway, this is just, like, I guess, the first half of the video, you could say, the key takeaway here is that be kind of weary of these liquidity indicators because it's not entirely clear if Bitcoin leads or if it lags. Some indicators suggest that it lags. Other indicators suggest that it follows. And if you like pay attention to like macro announcements, like I don't know, like CPI or Fed or whatever, whenever there's like a bullish macro announcement that would result in like more liquidity, crypto tends to rally like right now. Like it's almost like pricing in the liquidity before it even happens, if that makes any sense. So again, the kind of again the lead lag whatever, that's in my view very much up for debate. And not only that, but it doesn't matter at all when we enter these extremes in the market where crypto prices are going parabolic to the upside or just completely collapsing to the downside. In these situations, liquidity is not useful whatsoever. And of course, everyone is the main reason why people are following this liquidity is because they're saying if I can figure out when liquidity is going to top, then that's when Bitcoin's going to top too. But again, that's not true, and you're going to get smoked if you think that if you're kind of like approaching things in that sense. If you're waiting for basically for liquidity to top, history suggests that you could actually see liquidity top and then flatten, and then Bitcoin just continues powering higher, and you're going to be left thinking, oh my god, like I sold too early, I need to buy back in, right? Like that's the worst feeling ever, I would say. But anyways, so that begs the question: what is the, I guess you could say, more accurate liquidity indicator? What is the thing that's kind of missing from this picture? Or I guess more specifically, what is the dynamic that occurs during cycle tops and let's say cycle bottoms for Bitcoin and crypto? What is the factor that is driving crypto prices at that stage? And the answer, ladies and gentlemen, is leverage. This is something I think I've talked about in previous videos, and it's something I'm going to try talking about more as we head into the summer, because I think people are going to be surprised by a lot of the price action. And in my view, that's going to be because of all this leverage, both in CeFi and in DeFi. And of course, CeFi leverage is really hard to analyze because there's, the lending and everything there is super opaque. But we do have DeFi lending. And what's really fascinating here, guys, if we look at the total value locked in DeFi, you can see that this total value, and this is specifically just in lending protocols, you can see that the total value locked here has been rising a lot. And I'm sure that some of you are already preparing comments saying like, oh, but this rise in TVL, that's mostly due to the token price. Okay, fine, I will grant you that is accurate, but we can kind of use a, let's say, more refined indicator of how much liquidity is flowing into crypto as a form of leverage. You can make the argument that this is basically stablecoins, because again, USDT is used primarily for leverage trading, and USDC is used primarily in DeFi, especially to borrow against your crypto as collateral. So and of course, USDT and USDC are most of the stablecoin market cap. So if we can see that the stablecoin market cap is rising sharply, as it has been since November last year, you can see that even though, let's say, global liquidity has been like, faltering or slowing down or went down and then up, you can see that this crypto, quote unquote, crypto native liquidity has basically been going up and to the right, like vertically, more aggressively than anything. Well, I guess you could say last time we saw it was heading into actually the end of 2021, which is, I'm sure it's just a total coincidence and totally doesn't suggest anything. But you can see that we've seen a very rapid rise basically over the last, let's say, 8 months or so. There's been a massive rise in stablecoin market cap. And again, some of that is from trading, but a lot of that is also from DeFi TVL. And what's actually super fascinating, guys, if you just, burn this image into your brain here, again, we're just looking at the total value locked specifically in lending. This is not DeFi as a whole. This is just in lending and borrowing protocols. Look at this chart, and then let's take a look at Bitcoin. And this is basically over the same time frame. And what do you guys notice? It looks almost identical. Like it literally looks almost identical. Like even now, you can see that we're kind of seeing almost like you could say there's a big cup and handle pattern forming here. And now there's almost like, some people will say it's a double top. I actually think that this is basically on a break of a breakout. And if we look at Bitcoin, we see the exact same thing, kind of like a big cup and handle and a break, like basically pending a massive breakout double top. One quick thing actually, which reminds me, of course, a lot of DeFi lending historically happened against Ethereum. Now we're starting to see it happen more against Solana, and we're also starting to see it more happen against Bitcoin, specifically in DeFi. Lending against Bitcoin and CeFi was common during the previous cycle with like Voyager Digital and all these like different platforms and Celsius. But now we're with the with the rapid growth of wrap Bitcoin, especially like CBBTC, like Coinbase wrap Bitcoin, we're starting to see a lot more Bitcoin used in DeFi, which in my view is probably why the correlation has become so strong over the last year or so, let's say, between the the lending TVL and also Bitcoin's price. Like literally just the last 8 months looks exactly identical to what you see between DeFi TVL in lending protocol specifically and Bitcoin's price. I don't think that's a coincidence. Of course, you can make the case that, well, it's also like applies to the broader crypto market and whatever. But the point being is that if you want to get a sense of what is going on with crypto liquidity and how much higher crypto could go, and of course, this is more of like a real-time thing, I would strongly advise, not financial advice, but I would strongly advise in your analysis to take a look at the very least at the total value locked, and you can just find this easily on DeFi Llama, and the total value locked in DeFi lending and borrowing protocols. If you start to see this go vertical, then that means that there's a lot of, crypto native, you could basically call it crypto native liquidity being injected into the crypto market. And it's something you can double check again just by looking at the total stablecoin market cap. And if you want to go even further, you could just look specifically at USDC's market cap, which has also been going up and to the right aggressively. Everyone just assumes that liquidity is something that is external, that is something that can only be created by central banks or commercial banks, and like it's something that is external to crypto and comes into crypto. No one really thinks about the fact that, wait a minute, like Bitcoin, Ethereum, even like XRP and these large cryptos, they're starting to be used as collateral a lot. I mean, for Ethereum, it's been like that for a long time, but less, let's say, programmable cryptos like Bitcoin, like XRP, soon even ADA. Like these cryptos are starting to be used as collateral, and people are borrowing hundreds of millions, even billions of dollars against those cryptos, and then injecting that basically into the crypto market. So you can make the argument that that is basically like a form of crypto native liquidity, because it's not something that's coming externally into the crypto market. It's people borrowing against cryptos in the crypto market, and then basically pushing that price like also into mostly into altcoins, honestly. Then it's something that people don't really think about is when you start to see this go parabolic here, the DeFi lending here. Once this goes parabolic, I think that's going to correspond to a massive altcoin rally. And even think, this is where things get really kind of wonky. Actually, similar to why kind of like FTX collapsed, is that you could see a scenario, for example, that if a Bitcoin is super illiquid, then what happens when a bunch of people are borrowing billions of dollars against Bitcoin and then using that to buy more Bitcoin, and then that pumps Bitcoin's price even higher, so they borrow even more, and you just go in circles until you have this massive thing where even a slight amount of selling causes this massive amount of liquidations. And that's kind of what we saw here, actually, in the depths of the previous crypto bear market in terms of DeFi. And again, and that's the answer to the question, like why does Bitcoin decouple from global liquidity, from this external liquidity? Why does it decouple from macro liquidity from global M2 at cycle tops and cycle bottoms? The answer is because of leverage, specifically crypto native leverage, even more specifically like crypto native liquidity injections, right? In the form of basically mostly in the form of DeFi, in the form of CeFi, in the form of leverage trading and stuff like that. So again, these charts, again, I'm not saying that they're completely inaccurate. I'm not saying that they're not useful. They're definitely useful, but they're going to become more and I guess less and less useful and more questionable, especially as we reach kind of like the cycle top in the coming months. I personally believe that's going to happen this quarter. Other people think it's going to happen later this year. Doesn't matter. The point is, don't get too obsessed with these global macro liquidity charts, because at some point this crypto native liquidity is going to take over. And based on the charts here, it looks like it's going to happen at any moment. And this whole narrative of like, oh, well, liquidity isn't rising as aggressively as it was before, so therefore crypto can't possibly rally. They're forgetting that you're not just looking at global liquidity. You also have to look at the crypto native liquidity, which again can be measured using stablecoin market cap as a proxy, and that is rising pretty aggressively here. And I do think it's going to rise even more aggressively once stablecoin regulations are passed, which is going to happen probably like literally next week, like in the next couple of days, by the time you see this video. But anyways, guys, if you did enjoy this type of analysis, this is the type of stuff that I do every single day in the Coin Bureau Club. That's where you'll find deep dives into small cap altcoins every single week. The way that we select those altcoins is we basically do a poll and we let our members vote on which altcoins to review. There's a research feed where I'm sharing insights like these. We showcase our personal crypto portfolios as well as the cryptos that we're considering buying. We have an exclusive deals page where you can find discounts on crypto analytics platforms, like stuff like Bitcoin Magazine Pro, like not specifically that, but like similar platforms. And we also have a members Discord where you can discuss and you can ask us questions or roast us or tell us why we're right or why we're wrong. And so if that sounds awesome, do check out the link down in the description. And if you did make it this far, then be sure to smash that like button, subscribe to the channel, ping that notification bell, and I'll see you in the next one.